Good evening, everyone. Welcome to our evening LVRC classes. In our previous lectures, we completed the substantive portion of the GST law. Today, we are going to do some topics from the procedural chapters of the GST law. So as you know, that under any taxation law, there are different types of provisions. Substantive are the one which are creating the liability, which will be deciding, like in case of GST, the time, the value, the place, and also the related input tax rate eligibility. On similar lines, we have other provisions which are deciding who has to take registration, by when the registration has to be taken. That is, it will be dealing with the procedural part. So today we will be dealing with such chapters where different provisions on the procedures is covered. So broadly, our today's syllabus covers registration, tax payment, accounts and records, different types of documents like invoices, e-way bill, then provisions relating to electronic commerce operator, and also provisions relating to filing of our refund. So that is what our today's syllabus would encompass, right? And as usual, we will be also looking at amendments in these chapters. And then finally, if time permits, we'll take up few questions which are relevant for exams, which you may expect to face in your exams, so that a comprehensive overall revision of different chapters will be done today. So today we'll be having multiple chapters at one go, but they are the one which are quite, you can say, easy or quite manageable. So let me start with our first chapter for today for revision. That is the topic relating to registration. Now, when we talk about registration, what are the key aspects that you need to remember? First, as you know, in GST, the registration is PAN-based, but it is state-specific, which means that your registration number 15 digit is based on your PAN number. So it links the legal entity with the PAN so that there can be a cross, you can say, bifurcation, a cross verification of income tax with GST and with all other areas wherever the income tax is fetching data from. Secondly, in GST, even though the registration is PAN-based, but it is state-specific, which means if you have your presence in different states, then for each state, you need to take a separate registration. Now, question will come, what if I have multiple place of business branches in the same state? So over here, the law has provided an option. It is your choice whether you want to take a single registration for all the units in that state or you want to take separate registration. In case you decide to take a single registration for all the units in that same state, let us say there are 5 branches in the state of Maharashtra in different cities. In that particular case, you'll have to select one of them as your PPOB, principal place of business, and the remaining will be your APOB, that is additional place of business. The GSTIN, which is the GST identification number, or in simple words, the GST registration number, is a 15-digit number. And as I said, 10 digits of it are made up of your PAN. Starting 2 digits are made up of the state code. So it helps you identify from where or from which state that particular dealer belongs. Also, you need not take separate registration for each of the acts like CGST Act, SGST Act. There will be a single registration. So the registration is not act or tax specific. Now, who all are liable to register? So for this, there are 2 sections which will determine this. So first section which determines the liability to register is section 22, and the second section which determines the liability to register is section 24. 22 has linked the responsibility of registration with the turnover threshold. So for different states, different thresholds are provided. But in general, if you are engaged solely in goods, then the threshold is 40 lakhs. And if you are engaged in services or goods plus services, the threshold is 20 lakhs. Though there is carve out to this for special category of states, this turnover may be lower. So once you cross the turnover, you become liable for registration as per section 22. However, when we go to section 24 cases, you will find out that in those cases, even though you have not crossed the turnover threshold, still because of the specific transactions or the specific activity in which you are engaged, you may be required to take registration compulsory. That is what 24 will provide. Within 22, there are two more cases. So wherever there is a transfer of business, so you are taking over somebody else's business as a going concern, then as a transferee, you will be liable to take registration from the date of succession of that business. And next is wherever you get amalgamated or demerged by an order of the court, then again the transferee is liable to take registration from the date on which the registrar of company issues incorporation certificate giving effect to the order of the High Court. Now, as we saw, you have to decide the registration under section 22 mainly on the basis of threshold, which is the aggregate turnover. Now, how to determine this aggregate turnover? For this, the simple answer is you have to add up all your outward supplies. I repeat, you have to add up all your outward supplies. So first meaning of this is that wherever there are inward supplies on which you are liable to pay tax as a recipient, because those supplies are covered under RCM, they are not added in aggregate turnover because they are not your outward supplies. So they won't be added. But whatever is on your outward side, whether it is taxable, whether it is exempt, whether it is export, whether it is interstate, it makes no difference. All your outward supplies have to be added to find out your aggregate turnover. And most important, this is on all India basis. That is, it won't be computed state-wise, even though the registration we will be doing state-wise, but the eligibility will be dependent on your pan-India aggregate turnover. So, as I was saying, there are different limits. So for these four states, the threshold is rupees 10 lakhs for supplier of goods or for supplier of service or both. Then for these states, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, the turnover limit for registration is 20 lakhs for supplier of goods or if you are supplier of service or both. And then for remaining states, as you can see here, the limit, if you are exclusively in supply of goods, it is 40 lakhs. And if you are into supply of service or goods and service both, then it is 20 lakhs. Now coming to section 24 cases, where despite of you not crossing the threshold of turnover, still you are required to be compulsorily registered. So first is person who is making interstate supply of goods, not interstate supply of service, because that has been given relaxation in section 23. Next, a casual taxable person who goes to another state for a temporary period for making a supply from there. Similarly, a non-resident taxable person who again goes to another state for making a supply from them. Next, the person who is receiving supplies which are under RCM, so where the recipient is liable to pay tax. Then those e-commerce operators who are required to pay tax under 9(5), that is on behalf of suppliers who are using the e-commerce platform to make their supplies. So on behalf of those suppliers, the e-commerce operator is person liable to pay tax under 9(5). So in those cases, e-commerce operator will have to compulsorily get registered. Similarly, government entities where they are liable or required to deduct tax under section 51. Then a person who supplies on behalf of some other taxable person, that is what is agent. when acting for some principle. Then suppliers other than notified under 9.5 who supply through e-commerce operator. So whenever you are supplying through e-commerce operator and your transaction is not covered in 9.5, because if it is covered in 9.5, then the e-commerce operator is liable to pay tax. You need not get registered. So if it is not covered in 9.5, it means you are liable to pay tax. Then you will have to be registered. Next, again, every e-commerce operator who is required to do TCS. Next, person supplying order service from a place outside India to India. Then input service distributor. We studied this in our ITC chapter. This is generally your head office or corporate office. Then person who are supplying online money gaming, again from a place outside India to a person in India. And then any other person which the government may notify. Now, under section 23, who are excluded, exempted from taking registration despite of crossing the threshold of turnover, who are exclusively engaged in supplying goods which are either wholly exempt from tax or which are not liable to tax. So if you are engaged exclusively in supply of such goods or services which are wholly exempt or which are outside GST, there is no other supply other than this, you need not take registration. Agriculturist, but to the extent of supply made out of cultivation of land. To that extent, the agriculturists need not take registration. Then person who are making outward supply, where the supply is liable to be taxed under RCM. So the supplier need not pay tax. The tax has to be paid by the recipient. Such suppliers of RCM supplies need not take registration, again, assuming they are having no other transaction. Next, person making interstate supply of taxable service up to 20 lakhs. Person making interstate supply of notified handicraft goods up to rupees 20 lakhs. Casual taxable person making supply of notified handicraft goods up to 20 lakhs. So these are some specific exemptions given despite of it being covered in 24, but there is a carve out to 24. Next, person making intrastate supply of goods through ECU. Again, it is a carve out from 24. So 24 required every supplier who is making supply through ECU to get registered. But in that, this carve out is if you are going to make only intrastate supply, that also of goods through ECU, and your aggregate turnover is not exceeding the threshold limit, you need not take registration. Person making supplies of services through an ECU other than supplies specified at the 9.5 up to 20 lakhs. Now, wherever we have written 20 lakhs, as we have seen earlier, for some states, instead of 20 lakhs, the limit is 10 lakhs. So over there, this particular provision, wherever 20 lakhs has written, is to be read as 10 lakhs. Now, once you are covered in the above compulsory registration provision, either of section 22 or 24, then certain questions will come because now you are required to take registration. So first is where, in which state you are required to take registration. So the answer is in that every state where you are liable to pay tax. So where you are required to get registered in all those states from where you are making your supply. Next, this registration has to be applied for within 30 days from the date on which either you cross the turnover limit of 22 or you enter into any of the transactions of 24. Next, if you are a casual taxable person or non-resident taxable person who is coming to a place for a temporary period and making outward supply, they have to get registered again in that state where they are coming for doing that business for a temporary period. And here they have to get registered at least 5 days prior to the commencement of their business. So in other cases, the 30 days was after you cross the turnover or after you do that transaction. After that, you have 30 days window. Here you are supposed to take registration 5 days prior. Then a person who makes a supplies from territorial waters of India. So wherever your place of business is in the territorial water. Now the question will come, in which state? The answer is you have to get registered in the nearest coastal state from your place, which is in the territorial waters. And again, the application has to be done within 30 days. Now, besides compulsory registration under 22-24, if any person wishes to take registration voluntarily, that is without falling in 22 or 24, the person may take that registration. And similar to GSTIN, that is the registration which is given to regular businesses, there are some specified or notified agencies like the UNO or the multinational financial institutions or other such organizations who are notified. So for them, instead of taking GSTIN, they are given another registration which is called as UIN. Now, students, this part will be very relevant for your exams, specifically for case study type of questions. What is this point? From which date will the law consider you to be registered? In other words, what is the effective date of registration? So for this, the answer is you have to check whether you applied within 30 days of the date on which you were made liable to register. If yes, your effective date of registration will be the date on which you have become liable. I'll give you an example. So today is 18th of July. Today, you are required to take registration because today your turnover has crossed the threshold or you have entered into one of the transactions of section 24. Now, once this happens, in that particular case, you will be required to make application within 30 days from today. Now, let us say you make application by 5th of August, which is 30 days from today. So you have honored the 30 days window. In such cases, even though after that, because after that there is a process, your application goes to the officer, the nodal officer may require some more data, some documents, or the officer may require to make a physical visit. This may take further time. And finally, by 25th of November, the officer or the department communicates to you that, okay, you are finally registered. Now you are receiving the registration number and the certificate on 25th of November. But from which date will you be treated as registered? The answer is today, that is 18th of July. That is the date on which you became liable. Now, this will be the rule only if you have applied within the 30 days window. So if you are within time, we will give you registration from day one on which you are liable. However, if you are late, that is you have made application after 30 days of the date of you becoming liable. So again, you are liable today on 18th of July, but you delayed and you made application on 20th of August, which is 30 days later from today. Now, in such cases, since your application is late, now, whenever your registration is given, again, let us assume you are given registration by the department after completing all their formalities by 25th of November. Sorry, 25th of September. In such cases, you will be given the registration or your effective date of registration will be 25th of September and not 18th of July. So that is what is the difference. Now, what if you have applied voluntarily? So in case where you have applied voluntarily, anyways, there is no question of 30 days window. So in that case, your effective date of registration will be the date on which the registration is granted to you. Then there is a concept called as deemed registration. What is deemed registration? So deemed registration is once you have applied for registration, as we studied at the start, there is no act-wise registration. But we all know under GST there are different acts. So CGST also talks about registration, HGST also talks about registration, UTGST also talks about registration. Now, once you have taken registration under one act, you are deemed to be registered under all the acts. Similarly, if your application under one act is rejected, that is whatever application you have made is rejected, you are deemed to be rejected for all the acts. Fine. So that is what is the deeming provision. Now we come to step-by-step procedure, how you can take registration. So first, whenever you are liable for registration, you have to visit the GST portal. And in that, you have to go to the registration section where it is written register. And in that, you have to first fill the part A of the registration form, which is GST REG01. So you have to fill the part A. Now, part A only contains your basic details, your PAN number, and then it will ask you for your email ID, your telephone number, so that the OTP verification can be done. So once you fill in part A, the validation of your PAN is done by the GST portal by connecting to the CBDT database. So from there, they check whatever details you have given against the PAN, whether it is matching. And once that is done, they will do your OTP verification through the mobile number and the email address which you have given. And once all that is done, you are given a temporary reference number, which is for the time being your temporary identification number. Now, using this temporary reference number, you will have to now apply for the main part in the registration, which is part B. Now, part B is the one which will contain the main details like constitution of business. So whether you're a company, partnership, whatever, jurisdiction, whether you want to go for composition, date of commencement, reason for obtaining, whether it is compulsory, whether it is voluntary, then details of your principal place, additional place, bank accounts, and every other thing. On receipt of such application, an acknowledgement in the prescribed form shall be issued to the applicant. So once you fill in this, upload all the necessary documents, you are given a temporary, you can say confirmation or acknowledgement that, okay, we have received your details. Now, as we studied above, a casual taxable person applying for registration gets the temporary reference number for making the advance deposit. So as we saw, a casual taxable person and also an NRTP, they both have to take registration at least 5 days prior, and not only take registration, they have to also make payment of tax in advance on estimated basis. So all that has to be done before getting the registration. Now, once from your side, the application is made in part B up with all the documents, your application is sent to the nodal officer. Now starts the part 2, which is the part of the officer. Now, when your application reaches the officer, yeah. Now what will happen? Once it reaches the officer, now the proper officer to whom your application is forwarded will be scrutinizing whatever documents you have given along with your application with the other details. Now, what are the possibilities? First, is the same found in order? That is, whether all your documents are complete? Answer is yes. If yes, registration is granted within 7 days from the date of submission of application without site verification if the applicant has successfully validated his Aadhaar authentication. So if you've done your Aadhaar authentication, then even without the site verification, you will get your registration within 7 days. Next possibility, whether your application is found in order, yes, registration will be granted within 30 days of application after verification of site and prescribed documents. When this will happen, where applicant fails to undergo Aadhaar authentication or does not offer Aadhaar authentication, or where the proper officer deems it fit to carry out the site verification, or where a person who has undergone Aadhaar authentication is identified on common portal based on data analytic and risk parameters to carry out site verification. In any of these 3 scenarios, site verification, that is physical verification of your place, is conducted, and in that case, within 30 days of application, you will be granted registration. Now, other possibility is that your application, the documents are not found in order. Now what will happen? The proper officer will send an intimation seeking further clarifications or documents, if any. Now, this will be done within 30 days from application of your registration, when 30 days where the person fails to undergo Aadhaar authentication or the PO deems it fit, or where he has undergone Aadhaar authentication but the portal has identified because of some risk parameters. And otherwise, the officer will send you this within 7 days from the date of your application where no such problem is there and you have undergone Aadhaar authentication. Now, once the officer has given you this intimation, now you have to revert back within 7 days with all the necessary documents. So if the applicant has furnished the clarification or the information documents within 7 working days, time for receipt of notice. Answer is the proper officer is satisfied? Yes. The proper officer will give you registration within 7 days. If no, the proper officer will reject the application and record the reasons. So this is how the process for registration will happen. Now, going to the special procedure, which is for CTP, NRTP. So for CTP, as we discussed, he has to make a registration prior. Now, who is a CTP? A CTP is that person who is registered in India but in some other state, and he's traveling to another state for, let us say, participating in an exhibition, from where, for a temporary period like 2 days, 7 days, whatever is the exhibition period, the person will be making supplies from there. So such person needs to register in the state from where he is seeking to supply as a CTP. Similarly, who is an NRTP? NRTP is a person who is staying outside India and who is again coming to India for a short period and participating in some exhibition where the person will be making outward supplies. Now, for both these, the common process is that for both of them, they have to apply for registration at least 5 days in advance. Registration is granted to them only for the period which has been specified in the registration, and it may be extended only after making payment of advance deposit, that is the advance tax liability. Then registration is granted to them for the specified period which you have specified, like 7 days, which can be maximum 90 days from the date of your effective date of registration. Now, once you are registered and you have started a business, it may happen that in future you may require to amend your registration for varied reasons. Now, these reasons are classified into core amendments and non-core amendments. Except for changes in core information in the registration application, the taxable person shall be able to make amendments without any specific approval. So where it is a non-core amendment, you apply for it, you are given the amendment is made automatically, no officer will be verifying. However, in case you are making changes in the core field, then the taxpayer will apply for amendment within 15 days of the event, and the proper officer will approve and confirm the amendment or reject the amendment within next 15 days. For changes in non-core field, no approval of officer is required and the amendment is done immediately once you make the application. Now comes the next step, which is cancellation or suspension of registration, or later on revocation of cancellation. Now, once you are registered, you may not wish to continue as a registered person. Why? Either because you have closed down the business or because your turnover has fallen below the registration limit. In such cases, you may apply for cancellation. Similarly, in these cases where the officer gets to know about this, or let us say in case of death of proprietor, the officer may suo motu cancel. But besides this, wherever the officer finds that the person has done some default or entered into any type of bogus activity or contravened the law, or has not filed the returns for a continuous period of 6 months or 2 tax periods, in such cases, the officer may suo motu proceed to cancel the registration. Now, what is the procedure for cancellation? So as I said, either you may apply. So you have to make application within 30 days of the occurrence of the event because of which you want to cancel. In such cases, you have to furnish the details of whatever stock you are holding on the date of cancellation. Why? Because if you recall previous chapters, whatever is the stock lying on the date of you getting or becoming unregistered, you will have to reverse the input tax rate taken on that. Now, proper officer shall issue the order of cancellation within 30 days of the submission of application. Second is where the officer is cancelling suo motu. The officer shall first issue show cause to the registered person who has to reply to the said notice. If your reply is satisfactory and whatever is the pendency at your end, you comply with them, the proceedings will be dropped and cancellation will not happen. However, if you don't do that, the cancellation order will be given to you within 30 days of reply to SCN and the registration will be cancelled. Now, after your registration is cancelled, especially in case of suo motu, there is a possibility that you may want it to be revoked. Why? Because whatever was the officer's reason, either it was not communicated to you or you were not at that time in a position to respond, but now you are able to respond back. So even after cancellation by the officer, where the officer has done suo motu cancellation, you can apply within 90 days, which is extendable by 180 days by the commissioner or any officer authorized by the commissioner within this 90 or extended 180 days from the date of cancellation order. You may request the officer for revoking the cancellation. Now, before applying, you will have to make good whatever were the defects or defaults, like if you have not filed the returns, file the return, etc., and then make this application. If the officer is satisfied that okay, your registration should be continued, so the officer will revoke the cancellation and the registration will be restored. However, if the officer concludes that no, this revocation is not valid, he will first follow the principle of natural justice, give you a notice and allow you a hearing, and after that decide whether to finally reject your revocation application. However, there shall be deemed revocation of cancellation upon furnishing of pending returns, subject to the condition that the registration has not been cancelled by proper officer under Rule 22. And finally, revocation of cancellation shall be subject to some conditions and restrictions as may be prescribed. So students, these are some relevant provisions. Let me take you to some important updates. Now, as we saw that there is a long drawn process which requires minimum number of days. First, you are given 30 days, then the officer has 7 days. If the officer gives you query, again, you have to reply back in 7 days. And again, within 7 days, the officer has to grant registration. In some cases, this is also extended to 30 days. However, to promote business and to allow small businesses which are of no risk, new facility has been introduced by way of Rule 9A. And this is a very recent one. It is introduced with effect from 1st of November 2025. What it says that a person who has applied for registration and the person upon identification by the common portal on the basis of data analysis and risk parameter is found to be a non-risky person, it will be granted registration within 3 working days. So the entire process of 30 plus 7 plus 7 or 7 plus 7 plus 7 can be bypassed and you will be given a registration within 3 days. But this is provided that the system data analysis and risk assessment algorithm has classified you as low risk. However, if it classifies you as a high risk, then your registration application will travel in the normal routine which we discussed. Next, similarly, another point is option for small taxpayer to get registration electronically. So wherever a person who has made application for registration and the total output tax liability, which is supply of goods or service made to registered person, is not expected to exceed 2.5 lakhs and the person has Aadhaar authentication, then for such persons a simple registration procedure has been given whereby the taxpayer has to apply or can only apply for one registration per state under this option. So under this you cannot have multiple places of business, and again you will be granted registration within 3 days provided you have a proper Aadhaar authentication. Now, withdrawal from the option. If the registered person intends to withdraw from the option, he shall file an application in the prescribed form. What are the restrictions on withdrawal? A registered person shall be allowed to file such application only if he has furnished all returns due for the period from the effective date of registration till the date of application and no cancellation proceedings has been initiated. Aadhaar authentication and other verification shall apply for the withdrawal based on data analysis and risk parameters. And finally, issue of acknowledgement. Now, approval or rejection of your withdrawal application, the application filed for withdrawal shall be verified in accordance with the prescribed manner. After verification, the proper officer will issue an order within the specifying period, either allowing the application for withdrawal or rejecting the application for withdrawal. Now, once withdrawal is allowed, the registered person shall be able to furnish a detail of output liability exceeding 2.5 lakhs from the first day of the succeeding month in which the said order has been issued. So the limit of 2.5 lakhs will now not apply. Next, changes in particulars furnished in registered registration application. So where there is any change in the particulars furnished in application for registration in prescribed form, such particular should be amended before filing the application for withdrawal. Next, there are some amendments. So there is a reference of this new rule 9A and 14A in the original rule 10.1. So this is a simple, you can say, procedural amendment. So the reference to these new rules has been incorporated in the main rule for registration provision. Fine, students. So this was all about registration. Now let us move on to the next topic for our discussion, that is the important documents like tax invoice, debit note, credit note. So we'll be now discussing provisions relating to these important documents which are required to be issued under the GST law. Now, first question is, who can issue a tax invoice? So, who can issue a tax invoice? Every registered person supplying taxable goods or services or receiving taxable goods or services from unregistered person can issue. What is the time limit? Now, in case of goods, there is no 30 days window. So in case of goods, invoice has to be issued immediately once the goods are removed. Wherever there is movement, where there is no movement, the invoice has to be again issued immediately when the delivery of the goods is given. Now, here there is only one relaxation where the goods are sold or sent on return basis. In such cases, you may not immediately issue an invoice. So at the time of sending the goods, you may use a delivery challan. Using the delivery challan, you may send the goods for the time being. And after your goods have after your goods were given the confirmation by your supplier, by your buyer that yes, they are accepting the goods, you will be issuing invoice. Now here the maximum time given for getting the confirmation is 6 months from the date of removal. So you have to prepare the invoice within this 6 months period, or if before that you receive the confirmation on the date of receiving the confirmation. In case of services, generally you are given a 30 days window for issuing the invoice. So from the date of supply of service, you can prepare the invoice in next 30 days. If you are an insurance or a banking company, this 30 days is extended to 45 days. Just a minute, please. So now, in case there is continuous supply of goods, so the invoice for goods in such cases has to be issued at the time of each successive statement of accounts is issued. So as per your contract of this continuous supply of goods, whatever is the date for issuing the successive statement of accounts, that date is the date of issuing invoice, or where successive payments are to be made again as per your contract, that date of successive payment. So this is the date of preparing the invoice. However, where it is continuous supply of service, in that case, there are three possibilities. You have to check whether there is any due date provided for making payment. So if there is a due date provided in the contract for making payment, the date for issuing invoice is the due date for payment. If there is no such due date provided, then it is the date of receiving the payment. Next, where the payment is linked to the completion of an event, like generally in case of construction, the payment is linked to the stage of work completed, then the invoice has to be issued by the date of completion of that event. Now, what are the important requirements in an invoice? So these are the minimum things that have to be present in invoice. So first, your name, address, GSTIN, then the serial number, the date, name, address, GSTIN of registered recipient, then name, address of recipient along with delivery address if it is not registered. Next, HSN, description of the good service, quantity, value, taxable value, where the value and taxable value are different. You have to specify this separately. Rate of tax, amount of tax, most important, place of supply, where address of delivery and the place of supply are different, then you have to mention the address of delivery separately. Then whether the tax is payable on reserve charge basis, that has to be mentioned. And signature of supplier or authorized signatory, not required if the invoice issued as per IT Act. So if the invoice is issued as per IT Act, then the signature will not be required. And last, QR code having embedded IRN in it in case wherever e-invoice is applicable. Now, what is the number of copies that have to be prepared? So in case of supply of goods, the invoice should be prepared in duplicate, where original is for recipient, duplicate is for transporter, triplicate is for your own copy. In case of service, there is no transporter's copy, so it will be duplicate, original for recipient, and second copy for you. Serial number of invoices issued during a month shall be furnished electronically in the GSTR1 form. So in GSTR1, there is a specific tab for giving details of the documents issued. Over there, you have to mention the serial number for which you have given the invoices in that tax period. Now, as you all would be knowing, there is a specific concept of e-invoice. Now, e-invoice does not mean preparing the invoice from the GST portal. No. You continue to prepare invoice as per your accounting procedure and system. So it may be through your own customized accounting software or through some package software that you have purchased. So invoice will be prepared as per your accounting procedure and method. Only the thing is the details of the invoice have to be registered on the portal. And once you upload the details of the invoice on the e-invoice portal, it will give you IRN, which is the reference number, proving that your invoice details have been reported and recorded in the government's database. So invoice will be prepared as per your accounting system. Only the details will be only the details will have to be uploaded on the portal and get registered on the portal. Now, to whom this e-invoicing is applicable? It is applicable to all those registered person whose aggregate turnover, and again aggregate turnover means PAN base, not of one state, has exceeded rupees 5 crore in any financial year from the first year, which is 17-18 till date. Next, important terms. So you have a e-invoice schema. So what is e-invoice schema? So it is nothing but there is a uniform standard format which is applicable for all businesses across the country, where there are some mandatory fields in which you have to report the required information on the portal, and this has to be done in the form GST INV1. Correct? Now, you have to visit the invoice portal, which is the IRP portal. There are multiple portals made. Then over there, you have to upload the relevant details of the invoice and it will get registered over there, and then that will become an e-invoice. Now you are given a unique e-invoice reference number, which is called as IRN. This number is generated on the portal after all your details are successfully registered on that e-invoice portal, and your invoice will be considered as a valid invoice only after this IRN is generated. What are the advantages that are given over here? Now, situations in which e-invoice will be applicable or not applicable. First, you are into supply of goods or services to a registered person by the notified person. It means it should be a B2B supply, applicable. Exports by the notified person, applicable. B2C supply, not applicable. Invoices issued by ISD, IRN, that is e-invoicing, not applicable. Next, supply is made by notified person, tax on which is payable under RCM. So you are making an outward supply on which tax has to be paid by recipient, but still, if your turnover has exceeded the 5 crore mark, you have to do e-invoicing. Where specified category of supplies are received by notified person from unregistered person attracting reverse charge under 9(4). So that is where you are making self-invoice because your supplier is unregistered. So the supplier has not given any invoice. You are preparing the invoice. Or it is case of import of goods. You are not required to generate invoice. In short, invoice is required only on the outward side. So only for your outward transactions, you have to generate e-invoice. That also only for B2B. Now, interestingly, wherever e-invoice is applicable, there is no need to give 3 copies or 2 copies of invoice because you generate that IRN which is now available on the portal. So anybody can check that particular e-invoice through the barcode that is generated. Now, who are exempted from the e-invoicing provision? That is, they need not do the e-invoicing. First, SEZ unit. Second, an insurance or a banking company or a NBFC. Then GTA, that is Goods Transport Agency, who is providing services of transportation of goods by road. Similarly, passenger transportation service. Then wherever you go to watch movies in cinema theaters, they need not issue invoice, and government departments or local authorities, they also need not issue invoice. Now, what is the overall workflow of invoice? So the supplier has to first prepare the invoice as per their regular accounting system, then upload the e-invoice schema on the invoice portal. The invoice portal will generate the IRN. This IRN will be given to you, and the IRP digitally signs the e-invoice and add QR code. Then this portal returns the e-invoice to the supplier, and then the supplier shares this e-invoice with the receiver along with the QR code. Now, importantly, where you have generated this e-invoice on the portal, now the e-way bill part A gets auto-populated, because if you know, e-way bill part A also contains the invoice details only. So once this invoice portal sends the invoice data along with IRN. So it will first auto-populate in your GSTR1. Second, it will auto-populate in 2A of your receiver. And third, it will also generate the e-way bills part A. Now, what if the e-invoice which you have generated has to be cancelled? In such cases, what is important to be understood is it can be done only within specified time. If the time has elapsed and you are not able to cancel it, or let us say you require some changes to be done. In this case, there is no possibility of making the amendment in the e-invoice, or there is no possibility of cancellation after the prescribed date. In such cases, once this data will be auto-populated in your GSTR1, in that you may do the changes. Now then comes the next concept or the next type of invoice, which is the revised tax invoice. Dear student, let me inform you one thing. There is a misunderstanding about revised invoice. By the name, people interpret or understand it to be the correction of an invoice where some mistake has happened. This is what is the general understanding or interpretation from this term revised invoice. Let me inform you that is incorrect. GST law has no provision of revising or changing already prepared invoice. So if you have prepared an invoice with 1,000 unit, you cannot cancel or amend the same invoice to make it 900. That is not allowed in the GST. So there is nothing like changing the invoice generated. So revised invoice does not mean changing or correcting already generated invoice. Then the question is, what exactly is revised invoice? So over here, I would like you to take back to my example of registration. If you remember that example where we were discussing effective date of registration. So today on 18th of July, my turnover exceeded the limit of turnover, because of which registration become applicable. I applied within 30 days. So in my example, I had said I applied by 5th of August, which is within 30 days. So I'm within the 30 days window, I'm within time. But the entire process of registration took some time. So finally, I got the number on 25th of September, which is now more than 2 months from now. However, the effective date of registration is from today. Now, if you remember that point of effective date of registration, this revised invoice concept is related to that. What it says, now once my turnover has crossed today, now I know from today onwards, whatever I sell, whatever I supply, sorry, I need to compulsorily pay tax. And obviously, wherever I'm making supply to B2B, they will also be requiring that I should give them proper tax invoice so that they can take the credit. But the problem is today, when I'm seeing myself, I'm not having the registration number. I'll get the number in future. But today onwards, whatever supplies I'm making, all are liable to tax, because from today I'm liable for registration. Now, in such cases, what happens is from today till 25th of September, I am supposed to charge tax. I am supposed to collect it from the people. I am supposed to deposit it with the government. But practically, I cannot do it because I do not have GST number. Now, when I get the GST number on 25th of September, interestingly, it says it is applicable backdated from 18th of July. So the effective date of registration is today. So interestingly, on 25th September, when I'm informed my GST number and I'm given the GST certificate, I am said that, okay, you were eligible from 18th July only for doing the tax collection and issuing the invoice. So what can I do now? So that is where this revised tax invoice comes into picture. So firstly, from today onwards, whatever supply I will make, I will inform all my recipients, ki boss, now I'm covered under registration and I will give you a proper tax invoice once I get my GST number in future. So today temporarily I'm still continuing to give you the non-GST invoices because today I do not have the number, but I'm informing you that this will be converted to GST invoices in future. Now, in such cases, where I am giving you these invoices which are non-GST invoice today. 25th September, when I get my number, I have to sit and revise all these invoices, which means now I have to prepare a proper valid tax invoice. So what I'm doing, I'm replacing my earlier non-tax invoice with a proper tax invoice. This is what is called as revised tax invoice. So between this date, 18th of July in my example, up to 25th of September, between this date, whatever supplies I have made, I have given them non-tax invoice because today I do not have the number. But in future, whenever I'll get the number, I will change those invoices and give them a proper revised tax invoice in respect of whatever supplies I have made during this period. Is this clear to all? Ashok ji, Ashok ji. Okay. Ashok ji, am I visible and audible? Because at my end, suddenly things have gone blank. Ashok ji. Students, 1 second. I'll just re-log in. There seems to be some problem at my end. Okay, now I can see myself. Actually, my video had disappeared for some reason. Yes. Okay. Fine. So students, this is what I was explaining about revised tax invoice. So from 18th of July till 25th of September, for this period, whatever non-tax invoices I have given, I will revise it and I will give them a revised tax invoice. Now, similarly, wherever I am allowed to make a consolidated tax invoice, that is where I am supplying to unregistered recipient. Over there, I can issue a consolidated revised tax invoice. Now, in case where I'm making interstate supplies and the value of supply is not exceeding 2,50,000, a consolidated revised tax invoice may be issued separately in respect of all registered recipient located in the state. Now, what is a consolidated tax invoice? Now, here again, relaxation is given. So let us say I am a registered person, but a small business. And the outward supplies which I'm making, like if you take example, I'm a small grocery shop or a small salon, and the value of my supply is not exceeding rupees 200, one supply, and I'm making it to the unregistered recipient, and such recipient is also not asking for an invoice. When all these conditions are satisfied, the law says I need not prepare independent invoices for small values. Instead, at the end of the day, I can consolidate all the invoices and prepare one invoice for a day. So this particular consolidated tax invoice concept is applicable wherever I have small value supplies to unregistered recipient. Now next comes another concept. So this is the third document. First was tax invoice. Another we discussed was a revised invoice. Within that we discussed consolidated. Now we are coming to next concept or next document, that is bill of supply. Now what is a bill of supply? So I'm a registered person, but whatever I'm supplying is either exempt or I'm covered under the composition scheme. In such cases, I cannot issue a tax invoice because I cannot collect tax in both these cases. So the document which I issue is called as bill of supply instead of tax invoice. All details in the bill of supply is same like tax invoice except the details of tax. Next comes another document which is receipt voucher. Now receipt voucher is applicable whenever I am receiving advance. So if I'm receiving advance against supply to a person, in that particular case, I will be issuing a advance receipt voucher, which will be a proof of me receiving the advance payment from that person. And if this is a transaction of supply of service, you know that I have to pay tax on this advance. So for that, this document is very significant. Now here, there can be an issue. that at the time of receiving advance, if I do not know either the rate of tax or the nature of supply, whether inter or intra, then what should be done? So for rate, if it is not known, they are saying for the time being pay at 18%. And if I do not know the nature, whether inter or intra, I can treat it as interstate supply. Next comes refund voucher. So originally I had received advance, I had given receipt voucher. This we studied about. Now for some reason, the supply is not getting concluded. Now if supply is not getting concluded, I cannot give a tax invoice and I have to now return back the money to the recipient because now I'm not going to make a supply. In such cases, the evidence that I have returned back the money is the refund voucher. Next comes another document, that is self-invoice and payment voucher. Now, when is this applicable? Whenever I am procuring goods or services which are covered under RCM, that is the liability to pay taxes on me. Now, wherever my supplier is unregistered, in such cases, the supplier will not give me a tax invoice. And if my transaction is covered either 9.3 or 9.4, in both these cases, wherever my supplier is unregistered, the supplier will not be issuing me any invoice. So in such cases, I will make an invoice on myself. So I'm the recipient. I will make invoice on myself. This is called as self-invoice. Plus, for the payment which I have made, I will issue a payment voucher. Now, both these things are very important because in time of supply, if you remember, these documents will decide the date of me making the payment. Now here, an amendment has happened for the self-invoice provision that I should prepare this self-invoice within 30 days from the date of receiving the goods or services. Next, very crucial document in GST is the credit note. Now, when this applies, where I have already issued an invoice, and after issuing the invoice, later on it is found that the value which I have put in the invoice, I have wrongly claimed a higher value in the invoice, or I have wrongly charged a higher tax. So my value is higher, tax is higher. Or where the goods supplied by me are returned, or where the goods or supplies provided by me are found to be deficient. In all these cases, what I can do is to reduce the value or to reduce the tax in all the above cases, I can issue credit note for whatever supplies I have made in that financial year to my recipient. And on this basis, I can reduce my tax liability and correspondingly, the recipient reduces its ITC. Conversely, the concept of debit note is wherever already I have issued an invoice against some supply and later on I find that the value which I have charged in the invoice is less or the tax charge is less. Now to increase the value or increase the tax liability, I will issue a debit note to the recipient. What is very important is this credit note which I have to issue has a time limit. The time limit is next financial year's 30th of November or filing of annual return, whichever is earlier. However, for issuing debit note, students, there is no time limit. So make a note of this, that for credit note, there is a time limit. For debit note, there is no time limit. Correct? Okay. Let us go to the next topic, which is books of accounts. Now, the first question is, who is required to maintain books of accounts and at what place? Now here, every registered person is required to maintain books of accounts at the principal place plus the additional place. So accounts and records are required to be maintained at all the places which are your registered places of business. Next, records which are to be maintained. What are the records to be maintained? Stock details. So your account which will cover stock of goods received, supplied, opening balance, goods stolen, written off, given as gift or free sample, and the balance. Further, details of tax payable, tax collected, tax finally deposited with government, ITC claim, together with the register of the details of all the documents like tax invoice, credit note, debit note, delivery challan, etc. Next, Importantly, students, remember one thing. Unlike the old laws, here they have not given the names of the books which you have to prepare. Rather, they have only given the details of what information should be contained in the books. So what is the information they want you to record in your books? First is information relating to production or manufacture of goods, then inward and outward supply, stock of goods, ITC, availed, output tax payable. Further, the records which are prescribed by rules are, again, records are not giving the names of the registers, but what details they want. So where goods or services are imported, exported, then reverse charge supplies along with relevant documents. Now, what details you need to record in relation to this? Names and addresses of the suppliers of the goods services, the recipient of the goods services. Further, you need to maintain separate details about the advances and also about the addresses of the premises where the goods are stored. So these are all the details and information which you need to maintain compulsory. Next, if you are an agent, what all information you need to maintain? First, authorization received from each principal to receive or supply the goods on their behalf. Then particulars of goods or services which are either received or supplied on behalf of the principal, details of accounts furnished to every principal, and the tax paid on such receipts or supplies made on behalf of the principal. Next, what are some additional documents or records that are to be maintained by a manufacturer and by a service provider? So for manufacturer, the additional details to be maintained are monthly production details, which will show details of quantities of what? Of raw materials or services which you have consumed in manufacture. Then goods which are manufactured plus goods which may have become waste or byproducts. A service provider also has to maintain details showing quantity of goods used in the provision of service. Similarly, details of input service utilized and the final service provided. A works contractor, what details, additional details a works contractor need to maintain? Names and addresses of person on whose behalf the works contract is done and supplier from whom the goods services are received. Now, the works contractor need to maintain separate records. What details? Covering details of payment received for each works contract and the description, value and quantity of goods service received or utilized in the execution of the works contract. Next, what are the accounts and records to be maintained by the warehouse keeper or the person who are transporters? So records to be meant by the warehouse keeper are, firstly, they have to maintain the records whether or not they are registered under GST. What type of records? Records of the consignor, consignee, details of the goods. All these have to be maintained in the prescribed form and manner. Now, what type of details a transporter has to maintain? What are the goods they have transported, goods which they have sold during transit, the GSTIN of the consignor, the consignee, and for each of his branches, the same details have to be maintained. Further, a warehouse or a godown owner has to maintain records for the period for which goods have remained in their warehouse, and it should cover the particulars relating to the dispatch, movement, receipt, and disposal of such goods. Now, in what form these accounts have to be maintained, whether physical or electronic? So the law says you can maintain in any form. We allow both the forms. So even in electronic form, the books of accounts or data can be maintained and stored. Now here, where the records are in the electronic form, they have to be authenticated by digital signature. Further, you need to maintain proper backup of these records. Such records need to be produced on demand in hard copy or electronic format, whatever is demanded by the department. Further, details of files, passwords, and the explanation of various codes that you are using have to be given wherever asked for. Most important, relating to these records and accounts, some common principles are: first, No entry can be erased or overwritten. Incorrect entries, other than those of clerical nature, to be scored out under attestation and thereafter correct entry be recorded. In case electronic records are being maintained, a log of every entry which is edited or deleted shall be maintained. Books of accounts maintained manually should be serially numbered, and books of accounts are required to be produced whenever demanded by the officer. Now, what will happen if you do not maintain the accounts as required above? The proper officer may proceed to determine your tax liability on the unaccounted goods and service as if the same have been supplied. So whatever goods and service are not accounted for because you have not maintained proper books, they will be deemed to have been supplied. Further, provisions of section 73-74 shall apply mutatis mutandis for determination of such tax. Now, period of retention. The period of retention is 72 months from the due date of furnishing of annual return for the year to which these records pertain. So, from the date or the due date of furnishing the annual returns, for further 6 years, we have to maintain the accounts. Now, in case an appeal or revision application or any other proceedings are going on before the appellate or the revision authority or before the tribunal or court, in such cases, you should maintain it for a period of 1 year after the disposal of such appeal revision. Why? Because in case the opposite party, that is the department, wants to go in for a higher appeal, so you need to still preserve it for at least 1 year after your appeal, etc., is disposed of, or 72 months from the date of the annual return, whichever is later. So 72 months anyways you are maintaining. If your appeal is going on and this 72 months have passed, you have to still maintain it beyond that for at least 1 additional year. Now we come to another very important document under the GST law, that is the e-way bill. Before we start this, students, please understand one thing. What is an e-way bill? E-way bill is a document showing movement of goods. A document which is a proof that you have moved goods from place X to place Y. Now, this particular document is required to be generated by you whenever you are sending goods. I'm not using the word supplying goods. I'm using the word sending goods because, as I said, this document is to record, to report the movement. It may or may not involve supply. So at times it may happen that you have sent goods to your own branch, which is under the same registration. So there is no supply involved. Or you have sent some samples, or you have sent goods for testing, or you have sent your goods on approval basis. In all these cases, even though there is no supply involved, you have to still generate this document wherever the conditions are satisfied. So what is important, students, over here to be understood and noted is e-way bill is a document referencing or reporting or recording the movement. Now, when it is mandatory to prepare an e-way bill? Whenever the consignment value exceeds rupees 50,000. Now we are talking about interstate supplies, because for intrastate supplies, different states have changed the limits of 50,000 to 1 lakh. But we are not studying the state-wise rules, so we are going to keep the value as 50,000 for all our practical purposes. Now, you have to note it, students, there may be supply involved in this moment. It may not be involving supply, or it may be even involving inward supply, where your supplier is unregistered. In all these cases, whenever the goods are moving on road, it has to be supported by e-way bill whenever the conditions are satisfied. The first condition is consignment value should exceed 50,000. Now they have not used the word taxable value. They are saying consignment value. What it means, we'll discuss. Next. Now, whenever e-way bill has to be generated, in such cases, the registered person will go to the e-way bill portal and furnish the information in part A of the e-way bill, which is EWB 01, and this should be done before the commencement of movement. Very important point, e-way bill have to be generated even though your value is not exceeding 50,000. So first rule was it is exceeding 50,000, you have to generate. But even in cases where it has not exceeded 50,000, you will have to generate e-way bill. But in what cases? First, the case is that there is interstate transfer of handicrafts, and second is by a person who is exempted from registration. So where a person who is not required to take registration has sent handicrafts to another state, irrespective of value, you have to generate e-way bill. Now, how e-way bill can be generated? So a registered person has to fill in part A, which contains the invoice details. Now, if an e-commerce operator or a courier agency is moving the goods or it's involved in the movement of the goods, the e-commerce operator or the courier agency can furnish part A. Then the details of this part A will be auto-populated to your transporter, or you'll give this to your transporter, and transporter will fill in the part B, which covers the vehicle details. Now, even the transporter is authorized to do part A wherever you have given that authorization to the transporter. So in short, registered person can do the part A, or the e-commerce operator or courier agency who is actually doing movement will do part A, or the transporter, if authorized by you, can do the part A. Now, the different possibilities of movement are: you are moving the goods in your own vehicle, or wherever you are moving the goods by railways or by air, versus where neither the consignor or consignee has generated the e-way bill and the value exceeds 50,000. So in such cases, the rule is that e-way bill has to be generated by someone, either by the consignor or by the consignee. Now, what are the details that are required? So vehicle number is very important, because without this, the e-way bill part B cannot be finalized. Next, editing. E-way bills cannot be edited after generation. Updation, yes, possible. So wherever during the transit, either the vehicle has changed, or let us say the vehicle has a breakdown. So in such cases, you can do updation in e-way bill. And multiple invoices will require separate e-way bill, because e-way bill is for each invoice or each document. Now, we come to the concept of consignment value. We discussed that the consignment value, if exceeding 50,000, e-way bill is applicable. Now, how to find out this consignment value? So first, find out the value as per valuation provisions under section 15. Second, where the value is declared in the invoice or the bill of challan. So this value has to be declared there. Most important part, you have to add the GST component. Now, this is what is a very important point, because if you compare it with the taxable value or the valuation under 15, in 15, the taxable value was the value before GST. But here we are not taking taxable value, we are taking the consignment value. Consignment value is the value including GST. So you have to add the GST component in the value, and now on this total, that is the taxable value plus the consignment value, that total has to be checked for 50,000. Important. Wherever you are also transporting exempted goods, you have to exclude the value of exempted goods if invoice is issued in respect of both goods together. So if there is a combined invoice and bill of supply, so you will exclude the value of exempted goods while determining the 50,000 requirement. Now comes an important question. I have generated e-way bill. After generation, can I cancel it? Answer is yes. So an e-way bill is generated for goods transportation. However, within 24 hours of generation, if I find that there is some problem, I can cancel the generated e-way bill. When this can be done? When the goods have not been transported. Also, there is no verification during the transportation, e-way bill can be cancelled. Now, generation of consolidated e-way bill. Now, what is this? So wherever there are multiple consignment, there can be separate e-way bill. Now the transporter indicates serial number for separate e-way bill on the common portal electronically and generates the consolidated e-way bill in form EWB02. So EWB01 is the form for independent or individual e-way bills, and for consolidated bills it is EWB02. In that case, a single e-way bill will cover multiple consignments. Now comes to a very important point, that is the validity. Now students, keep in mind, this e-way bill is generated to track and record and report the moment. Importantly, when you are generating the e-way bill, the time of generation of e-way bill is very crucial, because from that time your transit, your transportation, your movement should be completed within this specified validity period. Now, what is the validity period? For up to 200 kilometers, it is 1 day, except for huge vehicles, which is called as over-dimensional cargo, or except where it is multimodal shipment, where different types of vehicles are involved, where one of the vehicle or one of the medium is by water. So for every 200 kilometers, or if it is in excess of 200 kilometers, for every part thereof, there will be 1 day counted. So if let us say you are transporting your goods for 180-kilometer distance, it will be 1 day. You are transporting it for 280 kilometers. So for first 200 kilometers, 1 day, and for remaining part of 80 kilometers, it will be another 1 day. So it will be 2 days. Now, in case you are transporting it using a over-dimensional cargo, or where it is in a multimodal shipment where one of the leg is shipped, in such cases, the validity period is for every 20 kilometers, it is 1 day. So where it is normal vehicle, so for every 200 kilometers, it is 1 day. But where it is over dimensional or a huge cargo, or where one of the medium is shipped, it will be 1 day for every 20 kilometers. Now, interestingly, whatever e-way bill you have generated on the portal, that e-way bill is also reflected to your counterparty. So if supplier has generated, the recipient can see it. If recipient has generated, the supplier can see it. Important point is, the other party has the option, the power to cancel this e-way bill within 72 hours. So the other party may accept or reject it, and for this the window is open to the other party up to 72 hours. Now comes the next part. Now, why is this e-way bill generated? So that while your goods are moving on the road, there is a possibility that an authorized officer can stop your vehicle, intercept your vehicle. Why? Because the officer is authorized under section 68 to do verification. So for verifying whether your goods are supported by proper invoice, proper e-invoice, proper e-way bill, the officer has the power to intercept the vehicle, to stop the vehicle, and ask you to produce all the documents. Wherever required, the officer can also conduct physical verification. So wherever the officer feels that whatever you have written in invoice, the goods in the vehicle are different, the officer can also do physical verification. Next, inspection and verification of goods. Now, wherever the officer decides to do inspection, what will happen? The proper officer has intercepted your vehicle, and it is doing the first inspection of goods in transit. Now, when it is doing that, it has to prepare and upload the report within 24 hours of interception of the vehicle. This report may be temporary. Then upon finalization, it will submit a final report, which will be within 3 days. But this summary report has to be submitted within 24 hours. So immediately after interception, within 24 hours, the first summary report has to be uploaded, and then final report has to be uploaded within 3 days. Now, in order to prevent re-inspection, that is, once let us say at one point your vehicle was stopped and verified, it should not again happen again and again. So there is a provision that if your vehicle was stopped once, if later at any further stage in the transit, again some other officer is stopping, you can show them the details that, see, my vehicle has already been once checked, and hence you need not re-inspect the vehicle. So the transporter can upload the detention information if the vehicle is detained for exceeding 30 minutes. So wherever the vehicle is stopped for 30 minutes and the officer has not generated proper documents, the transporter can generate its, the transporter can upload its report within 30 minutes if within 30 minutes the officer has not generated its report. Now, this e-way bill generation facility can be blocked on the portal. So the portal may not allow you to generate the e-way bill. Now, this is a mechanism by the portal to avoid fraudulent people do bogus transactions or who are trying to evade tax. How? So firstly, the portal identifies the defaulting supplier. So it identifies a supplier who has defaulted in any GST obligation. So for past period, if they have not filed their GSTR 1, 3B or not paid tax, then the second step the portal will do is they will block such suppliers GSTI. So the supplier GSTI is blocked, which will prevent the supplier from generating e-way bill. So the supplier is unable to generate e-way bill due to this blockage. Interestingly, the recipient or transporter can still generate the e-way bill using their GSTI. So the supplier is blocked, but the recipient can generate the e-way bill. Further, there can be restriction on furnishing of information in Part A of GST e-way bill 01. Now, when can this happen? In what cases the portal will not allow you to upload the details, in short, not allow you to generate the e-way bill? First, commissioner has authority to allow submission under prescribed conditions. Person who is having suspended GST registration cannot do that. If the person is under regular scheme and who hasn't filed returns for 2 consecutive tax period, where the taxpayer has not filed its GSTR1 for 2 consecutive tax periods, and in case of a composition supplier, the supplier hasn't furnished the statement for payment of self-assessed tax for 2 quarters. So in all these cases, on the basis of commissioner's direction, your e-way bill Part A generation may be restricted. Students, these are some details relating to documents and reports. Let us go to another chapter, that is payment of tax. Now, what we study in this payment of tax? We study some important aspects about how tax is paid. So now you have made your supplies, you have come to the end of the tax period, which let us say is month for you. Now you have to discharge the tax. Now, how this tax payment happens, that we are going to discuss. Here there are some important terms. So first is output tax. So output tax means the CGST, which is applicable on the taxable supply of goods or service by the taxable person or by the agent, but will not include the tax which you are required to pay under RCM. So RCM tax is not covered in output tax. Taxable person, we all know, the person who is registered or who is liable to be registered because of 22 or 24. Now, payments to be made. So if it is intrastate supply, you have to pay C plus S. If it is interstate supply, you have to pay IGST. And besides this, wherever applicable, you may have to pay interest, penalty, and other fees. Now, what is important about the payment process? So under GST, entire payment process is electronic. There is no manual system. So the first step is you have to generate the e-challan from the portal. Whatever is your medium of payment, whether you are making a physical payment by going to the bank and depositing the money, or you are making the payment online, payment mechanism can be any way, but the challan compulsorily has to be generated electronically. Now, second point, facilitation for taxpayer by providing hassle-free anytime, anywhere mode of payment. So there are different modes of payment provided. You can use all the online mediums like internet banking, and NEFT, RTGS, all this for making payment. Convenience of making payment online, logical tax collection data in the electronic format, faster remittance of tax revenue to government account, paperless, speedy accounting, electronic reconciliation, simplified procedure for banks, and warehousing of digital challan. Now, for doing this payment, you have to understand the different types of ledgers. So broadly, there are three electronic ledgers: cash ledger, liability ledger, and the credit ledger. Now, through these three ledgers, your entire payment happens. So whatever is your monthly output liability, that is reported or that is recorded in your liability ledger. So in your electronic liability register, you will see your output liability of every month, which will be on your outward supplies plus RC. Similarly, whatever credit you have received every month, that you can see in your electronic credit ledger. So in your ITC ledger, whatever is the eligible ITC as per section 16, 17, 18, that is shown here. And at the time of making payment, if your output liability, which is reported in the liability ledger, is higher than your electronic credit ledger liability, or if you have the RCM tax liability, which has to be paid compulsorily using the cash ledger. So for this, you have the third ledger where you can transfer money from your bank and you can utilize it for making payment. Let us understand all these in detail. So we first come to the cash ledger. So cash ledger is simply your bank account with the government. So whatever liability you have to pay to the government, that liability you can discharge using the cash ledger. Now, in cash ledger, how the money will be deposited? First, you can deposit it using various mechanisms, online modes, over the counter deposits, etc. Secondly, whatever is your TDS deducted by government, where the government is your recipient, or whatever is your TCS, which is collected by the online operator, where you are doing some transaction using the online operator's platform. All these amounts are deposited in your cash ledger. Now, from this, you can make payment of tax, interest, penalty, fees, or any other amount. Now, how to deposit money? So where you want to deposit money in the cash ledger, you can use all these modes. Now, as you can see, for all the online modes like internet banking, debit card, credit card, UPI, NEFT, RTGS, there is no limit. So any amount of money can be deposited in your cash ledger through these mediums. But where you are going to the bank and either using cash or check, which you are going to give over the counter, the limit is 10,000 per challan per tax period. So maximum amount that you can deposit in your cash ledger using the cash or the check medium is 10,000 per challan per tax period. Now, importantly, if I have to explain you the structure of your cash ledger is like a matrix where the headings of your columns are the taxes, major heads, IGST, CGST, SGST, UTGST, cess. So these are called as major heads, and within each major head, that is within each tax head, you have rows of minor heads. So first is IGST tax, IGST interest, IGST penalty, IGST fees, and others. Similarly, under CGST tax, CGST interest, penalty, fees, SGST tax, interest, penalty, fees, cess tax, interest, penalty, fees. So these are the various major heads in which you have these minor heads. So it is like a matrix. Now, what is considered as the date of deposit of tax? Whether it is the date of presentation of check, no. Whether it is a date in which you made the payment, no. It will be the date on which the amount is credited to the government's bank account. So only when finally the money reaches the government bank account, that is considered as the date of payment. Next ledger is the credit ledger. Now the credit ledger, as you all know, is created on the basis of whatever ITC is reflected in your GSTR 2B, which is coming to your GSTR 3B. Over there, whatever you show as the final net ITC availed in that month GSTR 3B, that becomes your final ITC. Now this ITC, the first point that you have to remember is the order of utilization. Now, when you have to utilize your input tax credit for discharging the tax liability, how you have to discharge? You have to start with the IGST credit. You have to first utilize it for making payment of IGST liability. Once that is exhausted, then you can use the IGST credit for making payment of CS. This can be done in any order, in any proportion. Once your IGST ITC is completely used up, then you have to go to CGST credit, use it for payment of CGST liability, and then payment of IGST liability. Once CGST credit has been fully utilized, then you can go to SGST credit, utilize it for SGST liability, and if required, against IGST liability. Most important, the CGST credit cannot be utilized for payment of SGST, and vice versa, SGST credit cannot be utilized for payment of CGST. Then comes the third ledger, which is the liability ledger or the liability register, in which all your liabilities are reported. Now, what is the rule? What is the sequence? So whenever there is a liability, you have to discharge the liability. And if there are multiple liabilities, it has to be discharged in this sequence. First, whatever are your self-assessed liability. Self-assessed means what you yourself have shown in your returns, that has to be discharged first. Within that, you have to first clear your past liabilities. So if you have any pending tax of last month, last to last month, you have to first clear them in sequence. Thereafter, you will discharge again your self-assessed liability of the current month. And finally, when you have discharged your entire self-assessed liability, then you will proceed to discharge the liability which the department or the officer has determined. So first you discharge your liability of past periods, then again your liability of current periods. Your means the liability which you have assessed, you have calculated and shown and claimed in your return. And then last comes the liability which the officer has determined. Most important, when you are discharging your liability using the credit ledger, you can only utilize the credit ledger for discharging the tax portion. If you have to discharge interest, fees, penalty, you will have to use the cash ledger only, because interest penalty cannot be discharged using your ITC ledger, because ITC ledger always has tax only. It does not have interest penalty. Correct? So electronic cash ledger, it will reflect all deposits made in cash plus the TDS TCS that has come to you. This ledger can be used for making any payment towards tax, interest, penalty, fees, etc. Credit ledger, it will reflect the ITC that you have self-assessed and taken in your monthly returns. The credit in this ledger can be used only for making payment of tax liability. If you have any other liability like interest, fees, etc., you cannot utilize credit ledger. Plus, if you have RCM tax liability, for that also you cannot utilize credit ledger. You have to utilize the cash ledger. And then finally, you have the electronic liability ledger, which will reflect the total tax liability after netting of that particular month's payments. Now, whenever you are utilizing these ledgers for making payments, in that particular case, there will be some entries in these ledgers. Now, we all know entry is debit and credit. Now, we first talk about cash ledger. Now, whatever amount you are depositing in the cash ledger through your bank or where any TDS TCS is coming, it is credited in your cash ledger. And whenever you are utilizing this cash ledger balance for making payment of tax, that amount is debited in your cash ledger. Now you'll say, sir, this is sounding absurd, because if I deposit money in my account, it should be debited. And when I make payment from my account, it should be credited. But here it is exactly vice versa. So what you are depositing is credited and what you are making payment is debited. Why? Because just remember your 11th standard BRS. You have bank account in your books, plus the bank has also maintained records of your transaction in their books, which we call as passbook or the bank statement. Now, if you read the passbook or if you see the passbook, whatever money you have deposited in your own bank account, the passbook shows it as credit. And whatever payments you have done from your bank, the passbook shows is that it's debit. This is same. This is your cash ledger balance or cash ledger details maintained in government's record. Now, since it is your details maintained in government records, that is why the sequence is opposite. So what you are depositing or what is getting deposited because of TDS, TCS, that is credited, and whatever payment is done is debited. Similarly, in credit ledger, whatever amount you have taken as credit is credited, and whatever amount you have utilized for making payment of your liability, that is debited. In your electronic liability register, what is happening? On the debit side, you have your liabilities. And on the credit side, you have the amount which you have utilized either from cash ledger or the credit ledger. So whatever is coming from cash ledger and credit ledger is credited, and whatever is the liability created every month is debited. Same logic, right? Now, what if you are making payment late? So whenever there is late payment, we all know it comes with interest exposure. Now, interest in GST is covered under section 50. What does 50 says? So if you have not paid your amount, then on the unpaid amount, there is interest, which is at the rate of 18%. Now, this interest has to be paid on the outstanding amount, but there is a relaxation. What is the relaxation? If let us say you file your returns late. So I was supposed to file my June month's return by 20th of July. I filed the return by 25th of August, 25th of September or later. So where I'm delaying my return, now my return is filed late. In that return, I have a liability of 1 lakh and I have a credit of 80,000. So I have to pay only through cash ledger 20,000, which let me call as my net liability. In such cases, the question is whether interest is calculated on the gross 1 lakh, which is my total liability, or on the net amount of 20,000, which I was actually required to pay through cash ledger. The answer is where you are filing the GSTR 3B late, that is after its due date. In that case, you have to pay interest only on the net amount, which is finally payable by the cash ledger. So in my example, it is on 20,000. However, the interest will be calculated on the gross liability, where the return is filed in time, but you are reporting that supply in future return. So let us say my June's return I filed within time limit, that is by 20th of July I filed. But there is some June month's transaction which I forgot to report in my June month's return. So June month's return is filed in time, but the June month's transaction I'm reporting in August or September month's return. So where I'm reporting a transaction in a future month's return, in that case, I will be required to pay tax on the gross liability. Further, wherever there is wrongful availment or utilization of ITC, so I've wrongly availed and utilized my ITC, I will have to pay interest on that at the rate of 18%. So for wrongful availment and utilization of my liability of my ITC, I have to again pay interest. Now, interest is not calculated only merely because you have taken wrong credit. It will be calculated once you utilize the credit wrongly. So interest will be calculated starting from the date when the credit is utilized wrongly. Coming to TDS. So the TDS is to be deducted at the rate of 2%. If it is CNS, it is 1%. Now, who will deduct my TDS? So wherever I'm making supply to central government, state government, local authority, government agencies, and the value of my supply under the contract is exceeding 2.5 lakhs. This 2.5 lakhs is excluding the GST portion. Then the government will have to deduct my TDS at the rate of 1 plus 1 or 2%. Importantly, where the government will not be deducting my TDS, where the location of supplier and place of supplier is different from the state of the recipient. So if the location of supplier and place of supplier falling in Rajasthan, and the government is in Maharashtra, it will not deduct my TDS. Due date of payment of TDS, it is within 10 days from the end of the month in which the TDS is deducted. Manner of TDS by the deductor. The deductor has to first take registration. Now here the deductor means the government. They need to remit such TDS collected by the 10th of the next month, and the amount of TDS which they have deposited will reflect in my cash ledger, which I have to accept. The moment I accept it, it gets added to my cash ledger. Manner of account of TDS. So any amount shown as TDS will be reflected in the electronic cash ledger. I can utilize this amount for discharging my liability towards any tax, interest, fees, etc. Now, how TDS will be applicable? So different situations, supplier, place of supply, and recipient all are in the same state. So it is an intrastate supply. TDS will be 1 plus 1, that is 1% CGST, 1% SGST. Supplier and place of supplier in different states. So the tax is interstate. TDS will be deducted 2% IGST. Supplier and place of supply are in the same state, but the recipient is in another state. It is an intrastate supply. No TDS will be deducted. So wherever the place of supply is falling in any other state, TDS cannot be deducted. And then finally, consequences of not complying with the TDS provision. If TDS is not deducted, then interest has to be paid along with the TDS amount, else the amount will be determined and recovered as per the law. TDS deducted but not paid to government or paid later than 10th, again interest has to be paid if the TDS is deposited late. So either TDS is not deducted, still interest is applicable, or TDS is deducted but not deposited by the 10th of next month, interest is applicable. Now comes, students, a very interesting point, transfer of input tax credit. Now you can also say it is like internal settlement between the governments. Now what is this internal settlement? See, we have seen in the utilization part that I can utilize my IGST for CNS liability also. Similarly, I can utilize my CGST for IGST liability also. I can utilize my SGST for ITC, IGST liability also. So whenever I am doing cross utilization, so within the government, they have to transfer that much balance from one government to another. So what it is given? ITC of CGST is used for payment of IGST. The amount equivalent to ITC so used is transferred by the central government, right? From central government. Means what? Now see, we all know that CGST and IGST both are with the center only, but still within center, they have separate accounts for CGST and IGST so that they can also maintain the records. So whenever I have the ITC of CGST, which I have used to set off IGST liability, what will happen? Government, central only, will shift the amount from the CGST account to the IGST account because CGST credit has been utilized for IGST. Similarly, if IGST credit is utilized for CGST or for UTGST, in such cases, again, now you again know that IGST and CNUT again both are with center. So again, the amount equivalent to the ITC so utilized will be transferred by the central government from their IGST account to the CGST or UTGST account. Now, interestingly, where ITC of IGST is used for discharging SGST liability. In such cases, the ITC so utilized will be transferred by the central government from their IGST account to the state government's SGST account against whom it is utilized. So now here it will be cross. Center will be transferring the money to the state. I hope this is clear, students. So here we'll take a break, and after break, we'll go to the remaining topics. Fine, students, let us have a break. an important one, that is e-commerce transactions. Okay, now let us discuss now what is e-commerce. So e-commerce means wherever there is either supply of goods or service or both, which may include digital product. And most important, this supply is done through a digital network or an electronic network. So in very simple words, wherever you are doing supply through an app, that app is what is e-commerce operator. And this entire transaction of doing that particular supply using an app, that is an online medium, is what is called as e-commerce. So the app is the e-commerce operator, and the transaction that you have done is the e-commerce. Now important, the definition of e-commerce operator. So e-commerce operator will mean a person who either owns, operates, or manage what? The digital or electronic facility or platform for doing e-commerce. So such a person who is owning, maintaining the digital platform, that is an app, is called as the e-commerce operator. Now, e-commerce taxability and registration, where supplier supplies goods or services through the ECO. Now, you are supplying your goods or services through an app, in simple words. Now, what are the various pointers? So first, supply of goods, suppliers supplying goods through ECO. So in this particular case, what the ECO is required to do? The ECO is compulsorily required to get registered on the app, and then is required to collect TCS under section 52. So for the purpose of collecting the TCS, the app is required to compulsorily take registration. This we have studied in section 24 also. So even though there is no turnover of the app, but since the app is required to collect TCS, it has to get registered compulsorily. Next, the supplier who is supplying goods through the ECO, for that supplier, what is the requirement? It is also required to obtain compulsory registration, except where the aggregate turnover of intrastate supplies with enrollment number in the preceding financial year or the current financial year is not exceeding the threshold. So if the supplier of the goods is going to make supply only within the state through the app, then it can take the benefit of the limit of 20 lakhs or 40 lakhs, whatever is applicable. And accordingly, it can then do the registration only after its turnover exceeds the limit. So point is that the supplier of the goods should be only making intrastate supply. In that case, it need not require to take the registration immediately. Next, whenever this supplier is supplying its goods through the e-commerce operator, the e-commerce operator has collected the TCS. Now, whenever the e-commerce operator will deposit the TCS, the supplier can take credit of the TCS. And as we saw in the previous chapter, this TCS credit will come in the cash ledger of the supplier, which the supplier can then later on use to discharge its tax liabilities. Second part is wherever there is supply of service. Now within supply of service, two possibilities. Whether the services are notified services, notified for the purpose of section 95, or they are other than notified. If they are notified services, then in case of the notified services ADE, the ECO is liable to pay tax in all cases, wherever in case of B and C, ECO is liable to pay tax on such services only where the person supplying such services is not liable for registration. So we'll see what is this A, B, C, D, E. So depending upon that whether the notified service is A, D, or E, that will decide whether the ECO will always pay tax, or if it is B and C, then ECO will pay tax only where the supplier is not liable for registration. Otherwise, the supplier, even though supplying services through that ECO, that is through that app, still the supplier itself will be paying the tax and ECO will not pay, but that is only in case of B and C. Now here, the supplier is entitled to the threshold limit of 20 lakhs, and in some states it is 10 lakhs. Here, supplier is again entitled to threshold limit of 20 lakhs, and in some cases 10 lakhs. So irrespective of service, the threshold for registration remains the same. Now, wherever there is supply of services other than the notified services, now in such cases, what will happen? The ECO through whom these services are being supplied, that is the app, again it has to compulsorily take registration, it has to collect TCS, and it may not collect TCS if the supplier is unregistered. So only where the supplier is registered, the ECO will be collecting the tax. Second, supplier who is supplying the services through the ECO, it is entitled to registration once the total turnover crosses the threshold, and it can take the credit of the TCS which the ECO has collected and pay. And again, if you remember, this credit will come in the cash ledger of the supplier. Now, what are the TCS provisions? So the TCS provisions are, so at present, the rate of TCS is 0.5% if it is IGST, and it will be 0.25 for CGST and SGST each. Now, who is the person who will be collecting TCS? So under GST law, there is only one case of TDS and one case of TCS. So TDS, as we saw earlier, the only case of TDS is where government is the recipient of service. In case of TCS, the applicability of TCS is only where goods or services are supplied through e-commerce operator, and the e-commerce is the person who is required to collect the tax. So under GST law, unlike the income tax law, there are no multiple cases of TDS and TCS. There is only one case. There is no threshold. So again, unlike income tax where you have TDS, TCS only if the transaction exceeds some amount, here there is no such amount. But in case of TDS, if you recall, there is amount of 2.5 lakhs. So wherever you are making supply to government and your contract value exceeds 2.5 lakhs, only in that case TDS is applicable. But for TCS, there is no such amount limit. Now, what is the value on which the ECO will be computing and collecting the TCS? So the ECO will be collecting the TCS on the net value. Now, what is net value? So net value is, now we all know, in case of online transactions, a very common feature is returns. In fact, nowadays majority of the online platforms are marketing this point that you can easily return it, you will easily get your money back. So they give you 7 days, 14 days, 15 days for using the product, and if not satisfied, returning the product. Now in such cases, how will the TCS be computed? So the TCS is computed by subtracting the value of taxable supplies which are returned back. So aggregate value of taxable supplies of goods and services minus supplies which are returned back, that is the amount on which TCS is to be computed. However, this is not applicable for notified services. Next, what is the due date for the deposit of the TCS? Same like TDS, it is the 10th of the next day, that is subsequent to the month in which the TCS was collected, right? Now let us go to some topics relating to updates. So there are some important updates. So first, there is an amendment in the list. So as we saw that there is a list of notified services which are covered under 9(5), where the ECO is compulsorily required to pay the tax. Now this list has undergone the change. So we will see the revised list. So what is the revised list? So what are these services which are covered under 9(5), on which it is always the ECO who has to pay tax? So first, service by way of transportation of passengers. So this is the Ola Uber service. Next, services by transportation of passenger in omnibus except where the person supplying such service through ECO is a company. Next, services of providing accommodation in hotel, in guest house, clubs, campsite, etc., except where the person supplying such services through e-commerce operator is liable for registration. So this is where you book a hotel. Next, services of housekeeping such as plumbing, carpentering, etc. Again here where the person supplying such service is not liable for registration, only then the ECO will be liable to pay the tax. Now here you will see that in some cases the ECO is liable to pay tax only where the supplier is not required to take registration. It means in these cases it is conditional. 9(5) is not always applicable. Only where the supplier is not liable for registration, then only 9(5) will be applicable. Otherwise 9(5) will not be applicable. Next, services by way of housekeeping. Sorry, this is done. Supply of restaurant services other than the service supplied by restaurant, eating joint, etc. located at specified premises. So wherever you are ordering food online, that is what is covered here. Now comes the next part. The next part is, which is the amended part. What is the amended part? Service by way of local delivery. Now, if you recall, we studied this point even in our exemption chapter, where we studied that now onwards, local delivery, wherever you are delivering goods within the city through certain apps like the Zepto app, Blinkit app, or maybe the Porter app, wherever you are only taking the services of delivering goods from one place to another, that is what is over here called as local delivery service. In case of local delivery service, again, what is the rule? Where the person supplying such service through the e-commerce operator is liable for registration. In that case, it will not come in 9(5). Only when it is not liable for registration, it will come in 9(5). This is clear to all? Correct? Okay. Let us go to the next topic of returns. So let us go to the return chapter. Now, firstly, what is a return? So it has been defined as a statement of information furnished by the taxpayer to tax administrators at regular intervals. Filing of return constitutes the most important compliance procedure which enables the government tax administration to estimate the tax collection for a particular period. The return of your outward supplies, which is under section 37, read with rule 59. Now, what does this provision says? So this return, which is your GSTR1 return, it covers all your details of your outward supplies. So many people call it as your sales return or the sales register. Sorry. Now, this GSTR1, which is the outward return or the sales return, it has to be filed by all registered persons, including the composition dealer, person deducting tax at source, person collecting tax at source, and the supplier of auditor services. So these people are excluded. Now, the form is GSTR1 and it can be furnished electronically on the portal or through the facilitation center. Now, what is the due date? So the due date is where a person is covered under the QRMP scheme. What is the scheme that we are going to see later? In this QRMP scheme, you have to file your returns quarterly. That is why it is QRMP. So tax payment is done monthly, but returns have to be filed quarterly. So this QRMP scheme, the taxpayers have to file their outward return, that is GSTR 1, by 13th of the succeeding month after the end of the quarter. Now, what about people who are not in the QRMP scheme? For them, after the end of the month, it is the 11th day. Now, under GST, we have something called as the IFF. Now, this IFF is applicable for the QRMP scheme. So let us understand what is this QRMP scheme. So QRMP scheme, as the name is, quarterly returns, monthly payment. Now, what is this quarterly returns and monthly payment? So for small taxpayers, the law has provided a facility that they need not get into monthly returns. So for them, you can say it is slightly the compliance has been relaxed so that they need not file the returns on a monthly basis. They can file it on quarterly basis. However, they will have to pay the tax on monthly basis. That is why it is QR, that is quarterly return, but MP, that is monthly payment. Now, what is this QRMP? Let us understand this. So in this QRMP, the taxpayer every month in the first 2 months only after the end of the quarter. At that time, it will cover the tax payments which are done on estimated basis in the first 2 months of the quarter, and only the difference tax has to be paid at the time of doing the monthly returns. Now, here there was a challenge. What is a challenge? If I'm filing my GSTR 1 monthly, my recipients to whom I am making outward supplies, they will get the ITC every month. But if I opt for QRMP, it is a facility to me, but it is disadvantageous to me because if I'm giving my QR quarterly return, that is GSTR 1, if I'm doing that quarterly, my ITC to my recipients is also going quarterly. Now, because of this, my recipients in some cases may not be happy to take that particular supply from me because they will get the credit late because I have opted for the quarterly returns. So this was adversely affecting my business. Hence, the government brought a scheme called as IFF, which is the Invoice Furnishing Facility. So this is coming along with the QRMP scheme. Now, what is happening in this is that under QRMP, you are filing your GSTR 1 quarterly, right? But in order that you can pass on the credit on a monthly basis so that your business is also not affected, you you need not wait for your GSTR 1, which will be filing only quarterly. You can upload the invoices on monthly basis. So even though you will be uploading your GSTR 1 on quarterly basis because you are a quarterly return, will not be impacted adversely. So what is this? So in this IFF, which is an optional facility and which is provided to the quarterly taxpayers who are under QRMP, you can file the details of outward supply in the first 2 months of the quarters between the first day after the end of the quarter up to 13th day. Up to maximum cumulative value of 50 lakhs in each of the first 2 months, you can upload the invoice. Now, the moment you are uploading this invoice using the IFF, what is happening is you are able to pass on the credits to your recipient. Now, what are the cases where a registered person is debarred from furnishing the GSTR 1 or the IFF? Now, this is important. Now, this you will find matching with what we also studied is where a person is debarred from e-way bill generation. See, these are now inbuilt facility whereby those taxpayers who are defaulters, tax evaders, so that they cannot pass on fake credits or they cannot just upload the GSTR1 and not pay the tax. So to avoid all these malpractices, the government has brought in some built-in mechanism. Now, what is this built-in mechanism? When you will not be able to file your GSTR1, you cannot file your GSTR1 if the GSTR 3B of the past month is not filed. So if you have not filed past month's 3B, it means you have not paid the tax. If you have not paid the tax of previous month, you cannot file this month's GSTR1. Similarly, when GSTR1 and IFF both are not allowed, where the person who is opting for QRMP has not furnished 3B of the last quarter, then person to whom intimation has been issued under 88C, unless he deposits the amount mentioned in the intimation or furnishes a reply explaining the reasons for the unpaid amount. Similarly, a person to whom intimation has been issued under 88D, unless he pays the amount of the excess ITC mentioned in the intimation. So wherever there is difference in GSTR 1 and 3B, you are given 88C. Notice wherever there is difference in 2B versus 3B, you are given 88D notice. Now, whatever is the amount mentioned in this notice, that amount either you have to give your explanation, which if accepted, no problem. Second, if you are not able to give a proper explanation why you have not paid this, then you will have to pay the amount, and only once you pay the amount, you will be eligible to file your next month's GSTR1 or do the IFF. So this is an inbuilt mechanism so that there is no tax pendency, there is no unnecessary excess claiming of 2B versus 3B. So this is to avoid the taxpayers from entering into malpractices. Next, when you'll not be allowed to run an IFF wherever registered person has not furnished the bank details as required in Rule 10A. Now, what are the different types of details of outward supplies that will be filed in this GSTR1 or 1A or IFF? So the details are all your outward taxable supplies where you are making it for B2B cases, that is where your recipient is registered. All interstate supplies, you have to upload invoice wise details. Very, very important. So for all B2B supplies, whether interstate, intrastate, you will have to give the details of each invoice. So every invoice, so you give the recipient details, the supply details, the tax details. So invoice wise details have to be uploaded whenever there is B2B supplies. Similarly, debit note, credit note issued during the month for such invoices, which were also previously issued, has also to be given. Next, details to be furnished in 1 or 1A. So firstly, let me tell you what is 1A. So once you have filed 1, and before you file your 3B, that is a final return, whatever is the time gap between these two returns, that is 1 and 3B. If between that you need to do some correction, so let us say you filed 1 and later on you identified there is some mistake, something is left out in 1, but still your 3B is yet to be filed. So the portal allows you this option to do a correction of the mistake which you have done in 1. So whatever was your mistake in 1, that you can correct using 1A. That is what is 1A. Now, what are the details going in 1A? So outward supplies, interstate, intrastate. If it is B2B, invoice wise detail is going. But if it is B2C supply, then the game changes. For intrastate B2C supplies, you have to only upload consolidated details of all invoices. You need not upload invoice wise details. But if B2C is interstate supplies, then there is an amount given. The amount is 1 lakh. If your individual invoice value is exceeding 1 lakh, for those invoices, you will give invoice wise details. For those invoices where the individual invoice value is up to 1 lakh, that is equal to or less than 1 lakh, you will only upload again the consolidated amount. Next, amendment to GSTR1. So as I said, 1A is the facility given wherever you have to do any correction in whatever you have already uploaded in 1. So this is an optional facility. You can use it to add new records. which the taxpayer missed to file in your GSTR1 that you can use or that you can upload using this. Second, to amend records which are already reported in one. So some record you have already reported, but you find that there is some mistake either in the value, the rate, the GST number, you can use 1A. And this has to be done after GSTR1, but before 3B. So this is important. The window for 1A is very small. Yes. Next, what if there is any mistake in your GSTR1? Now, first option you have to rectify the mistake is 1A. But as we saw, the window for 1A is very small. It will close the moment you have filed GSTR 3B. Now, what if you identify the mistake later? So let us say that month's all returns are filed and later on in future month, you realize that some mistake was done in GSTR1. So wherever there is a mistake of GSTR1 made in the previous periods, in such cases, you cannot use 1A. Now, what is the option? So you can use the next period's GSTR1. Within GSTR1, there is a separate category showing the amendment table. So what you can do is you can use the amendment tables of the next period's GSTR1, and in the next period's GSTR1, you can upload or you can do the correction of the previous month's mistakes. So one, if you have missed out some supplies in the previous month's GSTR1, uploaded in the future month's GSTR1, or where the supply is already made, but some changes have to be done. That you can do by using the amendment table of the next tax period. So let us say you have already filed April month's GSTR1. Now you identify that, okay, there is something which is missed out or which was reported, but which was reported wrongly and you need to correct it. You can use the next month's, current month's GSTR1 amendment table to do that. Now, what is the maximum time up to which these amendments are permissible? So it is next year's 30th November. So whatever filing of your annual return, whichever is earlier, within that you can make the amendment. Next comes nil GSTR1. So what will happen if in a particular month or quarter is compulsory? Point number one. Now, in such cases, wherever there is no details in that particular tax period, the law provides you to file GSTR1 nil, and it has been made very easy. In fact, you can even do it using SMS facility. So point is, you will have to file that. There is no exception or concession in that. The only thing is, it will be very easy process and it will be a fast process. Now coming to the second return, which is the return relating to your inward supplies. Now for inward supply students, let me inform you, originally when the GST law was passed in the year 2017, there, there was a separate return called as GSTR2, which you are supposed to file. However, later on, because of non-working of the GST portal, non-support of the GST portal for this GSTR2, the law dropped. Understand this, whenever your supplier is filing his GSTR1, which is the outward one, the supplier is showing details of supplies made to you. So in the, because my supplier's outward supply is my inward supply, will appear in the auto-populated statement. So the portal has a auto-populated inward statement, which is GSTR2A and also GSTR2B. So I need not file any GSTR2 now because that return has been discontinued. But whatever my suppliers have filed, that is reflecting in my portal. So at least I can check, I can verify whether my suppliers have completely correctly filed their outward details, because that will form the basis of my ITC. If you recall the ITC chapter, in ITC in section 16, there was one condition, very important condition, that I can take ITC only if my supplier has reported that in their GSTR1 and it is communicated to me. How it is communicated to me? It is communicated to me through this auto-populated, auto-generated statement, which is in GSTR 2A and 2B. So what is given? Details of inward supply in respect of which ITC may be available to the recipient. This is what is generated. Details of supply in respect of which ITC cannot be availed, whether wholly or partly by the recipient on account of the details of said supplies being furnished by registered supplier. So now this inward return will give me a breakup as to on what supplies ITC I can avail, on what supplies ITC I cannot avail. Now, for what reasons I cannot avail ITC, that is given in section 38 subsection 2. But let me tell you, all these have not yet been notified, so they have not yet been implemented. But the law has made the amendment in 38 section. So all these pointers are there, but today they have not yet been notified. So when my ITC will be shown as not allowed to me, first, where my supplier is a new registrant. That is, my supplier has just recently taken a registration. If I make purchases from such newly registered supplier, I may not be allowed to take the ITC. Second, where my supplier has defaulted in making payment of tax. So my supplier is not paying his output tax liability, I will be denied the ITC. Next, where my supplier has shown details of output tax in his GSTR1, which is exceeding the final tax which he has paid in GSTR 3B. So my supplier uploaded 100 invoices in the GSTR1, showing total value as 20 lakhs, but in GSTR 3B only paid tax, showing the sales of 18 lakhs. So where there is a difference in the GSTR1 and 3B of my supplier exceeding a limit, again my ITC may not be available of such supplier. Similarly, where my supplier has availed ITC in his 3B exceeding the credit which is shown in his 2B, again this will not make me eligible to take the ITC. And last, where my supplier has defaulted in discharging his tax liability in accordance with provisions of 4912 read with Rule 86B, that is where he has discharged more tax liability from the electronic credit ledger than what was allowed, then also it. Now, what are these auto-populated statements? So there are two auto-populated statements in which I can see what my suppliers have uploaded in their output return. Now, what are these two inward auto-populated statements? One is GSTR 2A, 2B. Both are similar because both are showing my inward supplies, but there is some difference. What are these differences? So GSTR 2A, which is a system generated statement, is updated on real-time basis. It will reflect details of invoices furnished by NRTP person in Form GSTR 5. It will reflect details of invoices furnished by ISD in Form GSTR 6. It will reflect details of TDS by TDS deductor in Form GSTR 7 and also of TCS collected by the e-commerce operator in GSTR 8. What is 2B? 2B is also auto-generated statement, but it is a locked statement. It is a static statement. So this is the main difference between 2A and 2B. It is available once a month. It reflects the details of outward supplies furnished by the supplier in the form GSTR 1 or 5 or 6, but only up to the cutoff dates. So wherever my supplier is filing his GSTR 1 late by even 1 day, I will not be able to take the credit because it will not appear in my 2B of that month. It will appear in my 2B of the next month. So only where my supplier are uploading their GSTR1 within the cutoff, that is the due dates given for GSTR1 or 5 and 6, only then that credit will appear in my 2B in that same month and I will be able to get the ITC. Otherwise, my ITC is gone. Next, details of outward supply furnished by the supplier who have opted for QRMP in Form GSTR1 or using IFF again up to the cutoff dates. And finally, it reflects the details of IGST paid on import of goods brought in the DTA from SEZ supplier. So all these additional information is also there, which is not in case of 2A. Now, like how a regular taxpayer has GSTR 2A and 2B. So we have ISD, that is where my head office has taken ISD registration. So for them also, they have inward details because they are making purchases from many suppliers. Those suppliers are uploading their GSTR 1. So for the ISD, it is reflected in their GSTR 6A. So wherever an ISD wants to see what are its inward supplies details auto-populated, it will find it in GSTR 6A. Similarly, where a composition dealer wants to see what are the inward supplies, it will be auto-populated in GSTR 4A. So for ISD and for composition taxpayer, there is no 2A and 2B because that will auto-populate in 6A and 4A respectively. Now, after the inward return, that is the auto-populated statement in 2A and 2B, we come to our main return, which is also called as the final return, which is in filed in 3B. For composition dealer, it is filed in 4. For NRTP, it is filed in 5. And TDS will be reported in 7. TCS is reported in 8. Plus ISD is reported in 6. So these are the forms for showing the tax liability, the final liability of every person. Now, what is this form under section 39? So students, this is your main return. So 1 was your outward supply, 2A, 2B was your inward supply. This form is your final return showing both at one place and your final tax liability which arises during that month, how much of it you are discharging using the credit ledger and the balance which you will discharge using the cash ledger. So your complete details of that tax period, which may be a month or quarter, is reflected in this main return. So this is the main or the final return. Now, who are excluded from this? ISD is not required to file 3B because ISD has a separate return in GSTR 6. NRTP is excluded because it has a separate return in 5. Composition dealer is not required to file 3B because it has a separate return in 4. TDS is 7, TCS is 8, and OIDER services who are located outside the taxable territory, these people are excluded from filing 3B because they have their own separate forms for filing their tax liability or showing the details of the tax liability. Now, what are the due dates for furnishing the 3B form? So GSTR 3B can be filed monthly, quarterly, and the due dates are as follows. So what are the due dates? So for monthly GSTR 3B, the due date is 20th. So whoever are covered in monthly filers, for them the due date is 20th. But those who are quarterly filers, there are two different due dates. So for different states, different due dates are given. So some states have due date as 22nd of the month after the end of the quarter, and for remaining states it is 24th. Now, as we discussed, there is a QRMP scheme, which is an optional scheme under which you have to file return quarterly, but you have to pay tax monthly. Now, who are eligible for this facility of QRMP? The taxpayer should have turnover not exceeding 5 crore in the previous financial year. Further, the taxpayer must have furnished the last return as due on the date of exercising this option. Taxpayer can opt in from any quarter from first day of the second month of the preceding quarter to the last day of the first month of the quarter for which the option is being exercised. Next, validity. The taxpayers are not required to exercise their option every quarter. Where such option has been exercised once, they shall continue to furnish the return as per the selected option for the remaining tax period, unless they revise the said option. So they can opt for this between the year, but once they opt for it, they should generally continue the scheme as per the option for the remaining year of that tax period. Now, you are allowed to opt for QRMP, GST, and Invoice. So if you have multiple registrations, then for some registration, you may avail QRMP, and for some registrations, you may go for the regular method, that is the monthly scheme or non-QRMP. Now, opting out of QRMP. When you will be out of the QRMP 1, where your turnover exceeds 5 crore in that financial year, you will switch to monthly. Second, availability of facility of opting out of QRMP for a quarter. So if during the same year you independently or suo moto wants to opt out, that is also allowed. Again, that has to be done between first day of the second month of the preceding quarter to the last day of the first month of the next quarter. Now, same like GSTR 1, 3B can also be filed nil. Again, first point, filing of 3B is mandatory for everyone, even though there is no data, but still 3B has to be filed. Maximum what can be done? 3B can be filed nil. Now coming to the other returns. So what are the other returns? So for composition dealer, you have only one return for the year, which is GSTR 4. So this is yearly return. What details are to be furnished? Invoice wise inward supplies and consolidated outward supplies filed yearly when after the end of the year by 30th day of June. So after the year ends, you can file it by 30th of June. Now, even though return is yearly, tax payment has to be done quarterly. How? After the end of the quarter, you have to use this challan, which is GST CMP 08. In this challan, you have to furnish the details of the payment, which will be your self-assessed tax and GST. So this is the quarterly compliance for the composition dealer. Now, the inward supplies of composition dealer received from registered persons who are filing GSTR 1 will be auto-populated in their 4A, and this will be for viewing. Same like how we are doing it in 2A, 2B. Same way, the composition dealer can view their inward supplies in their GSTR 4A. Now, filing of nil CMP 08 is also mandatory, like how GSTR 1 and 3B nil were mandatory. So if in a quarter you don't have any payment still, you have to file nil CMP 08. Next return is GSTR 5. This is for NRTPs. So if you are NRTP, that is non-resident taxable person, you will have to file GSTR 5. Now this will contain details of inward supplies or the details of your outward supplies. This has to be filed monthly, and by when? Within 30 days after the end of that month, or since you are here for a short period, within 7 days after the last date of the validity of your registration, whichever is earlier. So if your validity of the registration is ending before the end of the month, so you have to file your return within 7 days after that. Most important, NRTP is not required to file annual return. So it has to only file the monthly return, and that also only up to the date the registration of this NRTP is valid. So as we have seen, NRTP is for a short period. So they have to file this return for that short period only. Then comes GSTR 6. So GSTR 6 is the return of your head office or your corporate office who has taken this special registration of ISD. Now, we studied this in ITC chapter that wherever you have a corporate office or head office which is receiving some inward supplies of input services which are common. Common means they are used by multiple entities, multiple GSTIs of the same entity. Then this ISD can do what? This ISD can receive the credit first, which is of those common input services, and then it can distribute the credit to all the beneficiary units. So your ISD, your head office who is receiving common input service can take the ITC of those common input service and then distribute it using this form, which is GSTR 6. So in GSTR 6, what details will be recorded? First is the ITC received for distribution, total ITC, eligible ITC, ineligible ITC, which it can distribute for that period, and also the details of debit note, credit note received. They have to file this return monthly. By when? By 13th of the end of that month. Again, ISG is also not required to file any annual return. Then comes a TDS return in GSTR 7. So it is the return for TDS where taxable goods, services or both are supplied to government, government department or local authority or government agency, and the total value of this supply exceeds 250. This we have already seen that when TDS is applicable. Now, GSTR 7A, this is the form for issue of TDS certificate by the deductor of the TDS to the deductee. Now, the deductor will file GSTR 7, which is again the monthly return of TDS. Again, it has to be filed on or before 10th day after the end of the month. GSTR 7 would be furnished even for a month where no TDS is to be deducted. That is again nil. GSTR 7 is compulsory. Now, what are the timelines? So due dates for paying payment of tax for the persons required to file monthly GSTR 3B, GSTR 5 and 7. It is the last date of filing returns. So please understand, there is no separate due date for making payment of tax. You have to make the payment of tax along with the filing of returns. So whatever is the last date for filing of the returns is also your due date for making payment of tax. And for composition dealer only, there is a separate due date because their returns are annual, but they have to file, or sorry, they have to make payment quarterly. So since their return is annual, so for them there is a separate due date, which is a quarterly due date for making payment of their taxes, which is by 18th of the month after the end of the quarter. Now for QRMP scheme, how will they pay tax? Now in case of QRMP, if you remember, QRMP is quarterly return but monthly payment. Now interestingly, you are going to file month 1, month 2 of the quarter. Now in month 1 and month 2 of your quarter where you have not filed your GSTR 1, not filed your 3B, how do you assess the liability? So here the law has given you option. So what does the law says? That tax due in each of the first 2 months of the quarter, you have to pay that tax in the pre-filled form, which is through GST PMT 06, and the payment has to be made by 25th of the next month. Now, importantly, how will you determine how much amount has to be paid? Because you have not filed the return in the first month and the second month of the quarter, but still you have to pay tax in month 1 and month 2 of the quarter. So for both the months, how will you determine the tax liability? So there are two options given. You have to select one of the options. Either it is a fixed sum method, or you can do your self-assessment. And on the payment, on the basis of the amount that you calculate under these methods, whatever you have opted, you will make the payment. Now, how will you compute the amount under the fixed sum method? So here you have to pay tax due in each of the first 2 months of the quarter. You have to pay this using PMT 06 by 25th of the next month. Now, how this fixed amount is calculated? You have to pay in month 1, month 2, both the months. How much? 35% of the tax, which is paid using the cash ledger in the return of the preceding quarter, where the return was furnished quarterly. So you have to see the last quarter's return, and in the last quarter, whatever was your tax liability paid using the cash ledger, take that amount, make make 35% of that amount, pay it in the first quarter, pay it in the first month, again 35% paid in the second month. The tax liability paid in the cash in the return for the last month for the immediately preceding quarter where the return was furnished monthly. If prior to this you are not in quarterly return system, you are in monthly return system, then you have to see the tax liability of the last month. Whatever was the tax liability of the last month, which you paid using the cash ledger, that liability, take 35% of that and pay that amount 35% in month 1, again 35% in month 2. Monthly tax payment through this method would not be available to those registered persons who have not furnished the return for a complete tax period preceding such month. So by chance there is no return filed in the previous month before this, then obviously this option is not available. Now what is the second method, which is the self-assessment method? The taxpayer can pay the tax by considering, now I'll change the word considering to estimating the tax liability on inward and outward supplies and the ITC available. So here you will have to keep a working sheet. Every month you'll have to find out your outward, your ITC, do the net, and whatever is your estimated actual liability of month 1, same you have to do it month 2, estimate the tax liability of month 2, pay that using again the same form GST PMT 06. Now comes the point of interest. So where you have paid the tax using the fixed sum method. So where auto calculated fixed sum amount for first 2 months of the quarter is paid by the due date, no interest would be applicable even if the liability for the month is found higher, if 3B of the quarter is filed by the due date by discharging the entire liability. Where a taxpayer makes monthly payment beyond due date, obviously in such case, interest is payable at the applicable rate from the due date of PMT06 till the date of making payment. Where GSTR 3B is furnished beyond due date, interest is payable under 50. If you have opted for the second method, which is self-assessment method, interest is payable as per section 50 or tax or any part thereof, which remains unpaid beyond the due date in the first 2 months. Now, rectification of errors. So whenever there is any mistake committed, please remember there is no concept of revised return. Again, what you can do is you can rectify it in the next month's return. This we saw in GSTR 1 also, same as in GSTR 3B also. So if there is any return, a mistake in your return in 3B, you pay or you correct that in the next month's 3B. Now, by when can you do this correction? You can do this correction in the next month's 3B, maximum up to next year's 30th November or your date of filing annual return, whichever is earlier. What are some other returns? First return. Now this first return, again come back to the registration topic. Today I was liable to register, but I got the number in 25th of September. Now for this period, I have not filed any return. Why? Because I was not having number. How I will file? So obviously I will file my first return after 25th of November only, which will cover all my liabilities from 18th of July till the end of September. So if I have got my registration in on 25th of September, but I was liable from 18th of July. From 18th of July till the September month end, I will file one return, which is my first return, which will cover more than 1 month's liability. Next, GSTR 8 is the statement for tax collection at source. So wherever TCS is applicable, which is applicable to e-commerce operator, they have to file this particular statement or return, and this has to be done by the 10th of next month. Then you have something called as final return. So wherever your registration you are cancelling or surrendering, within 3 months from the date of cancellation, you have to file this return in which from your side you will complete all the liability, if any, pending. And then finally comes the annual return. So annual return, it has to be filed by all the registered persons except casual taxable person, ISD, NRTP, and the person who are deducting or collecting tax at source. So except these persons, remaining all have to file the annual return. What are the annual returns? So it is GSTR 9 for registered persons, 9A for composition taxpayer, 9B for ECO, which is not yet notified. And then finally comes your self-certified reconciliation statement. This is in form 9C. Again, this has to be filed by all taxpayers, but only if their aggregate turnover in the financial year is exceeding 5 crores. This will not be filed by CTP, ISD, NRTP, and tax deductor or tax collector at source. Then coming to details of inward supplies of persons having UIN. If you remember at the start when we were discussing registration chapter, we discussed that some notified entities, especially the foreign bodies working in India, they will apply for registration, but their registration will not be GSTIN, their number is UIN. Now, why is this UIN there? Because whatever are their inward supplies, they are given a special facility of taking refund. That is why they are given a separate number, which is UIN. And then coming to another person, there is a person who is providing OIDER services. As you saw, this person is exception to all the above returns. Why? Because it has a special return in form GSTR 5A. So who is covered in this? Person who is providing online money gaming from a place outside India to a person in India, or providing OIDER services from a place outside India to a non-taxable online recipient in India. By when they have to file the return? By 20th day of the month succeeding the end of the month or part thereof. Now, besides this, in order to collect some information, certain bodies are required to furnish the information return. Now, these are those bodies. What they have to do? So, whatever information they are having pertaining to other taxpayers, they are supposed to upload this information in the respective returns so that the GST department collects information about all of us through these persons. Who are these? Income tax authority, bank, electricity board, registrar office, etc. Defective information written. So commissioner may authorize officers consider information furnished in the information written to be defective. The defect will be intimated and this defect has to be rectified within 30 days from the date of intimation. Otherwise, your information written, whatever you have filed, will become null and void. Issuance of notice for failure to furnish the information written. So if you have not filed the return, then the commissioner or any authorized officer will send the notice asking you to file the return. And again, within a period of 90 days, you will have to file this return. So students, this is the end of the entire returns chapter as well. So with this, we have completed all the designated topics for today. I'm sure you have understood everything because we have covered everything in complete detail. And I'm sure even though the procedural part may not be very relevant for exams, but for whatever marks you get, you will be able to score the entire marks. So with this, I conclude today's topic. And again, we connect in the next class for our next part of the syllabus. So till then, please study well and keep in touch with your studies. Thank you all and good night. Yes, Ashok, session over. Thank you to you.